All right. So, like the last video said, please take this serious. We now need to talk more and more and more on, okay, what a person looking for when they trade. So what we're going to do is we're going to start on the monthly chart, okay? This is where we got to get the notepads out and notebooks, all right? Let's start on the monthly chart, all right? We're going to go to CL1. CL1 is the longer time frames, okay? CL1. 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 We're going to look at CL1. I'm gonna get rid of all my little lines I had on here because this is we need to know what we're really looking at, okay? Today is the first day of March, okay? We're starting on the monthly chart. Today, this candle represents the new day and month. All right. Since this is a monthly chart we're looking at, today is the first day of what is it? March. We're already the third month into 2024. Third month in. So today is that day. Okay. We now need to really focus in on what's really going on. So just look at this month alone, okay? Just look at this candle alone. That's the new candle that's being formed now for the month of March. This is me right now finna analyze what's going on, okay? I'm just getting technical. As you can see on the bottom all the way down here, everybody should know what moving average this is. You hear me talk about it all the time. This is my baby down here. That's that 200. Okay, all the way down here. Here's the monthly chart. The monthly chart is telling me that we have a support area. This is support at 55.99. Okay? We have a support on the monthly chart at 55.99. Okay? As we can see in the last few months, going into last year, all right, we see a range. The market has been stopping in this particular area here, right? And the best way to get to that area is go over here to the left hand side. Let's just focus on where the market currently is right now. We're just gonna focus on this little cluster. Let's go over here to the horizontal line. This is me getting real deep and technical. Right here on the bottom, just need to put this line on the lowest candle that we have in this area, okay? And so far, the lowest candle will be this candle right here for June of last year. All right, I'm gonna put it on here, not the wicks themselves, but the bottom body of the candle, the bottom bodies of the candle, not the wicks, but the body itself. So I'm gonna put it about right here. All right, I'm gonna color this red because red represent. Yeah, I do green because green represent buy. We want to buy all the time at this line. All right. So we know here based on the monthly chart. Here's the monthly chart. If I zoom out, I can go over to the left and just look at all the candles. All you see when they get here, they all like rest, relax, and chill in this particular area. Look at all these candles. It's proof right here. Look at all the proof that we got. We got the candles right here. We got candles that they wick and go down, but they all stay above. We have this one right here, open above and stayed above. Over here, same thing. All right. So we know from a monthly chart that this is a good area of support. Simple. This is a good area of support, but look what the 200 moving average is. The 200 moving average is down here at 55.99, right? So this is just letting you know in general this is a strong major support. But as always, guys, the market can continue to fall down. But if it does continue to fall down, the 200 moving average is letting you know this is the extreme overbought area. The market is already up here, but if the market continues to fall here, this is a real extreme overbought area. As you can see, all of this right here was during the pandemic. So this was 2020. All this was 2020 during the pandemic, when the pandemic was at its hottest. That February, March, that's where it got real. April, that's where it got real during the pandemic. Now all of January to April, May, that whole year, man. But when it fell down really, really hard in April. I believe in April, that's when they was telling everybody that you have to take the vaccine. They was enforcing the vaccines on people. They was putting fear into everybody. Everybody was afraid. They was telling everybody to stand 6 feet away from each other, even at home. How you gonna stand 6 feet away from people at home? You know what I mean? Don't even touch your kid. Let you stand 6 feet away from the kids too. Stand 6 feet away from everybody. Oh, don't go to grandma and grandpa's house. You gotta see them. Just go to the house and see them from outside. You gotta stay outside and watch them and communicate through the window. It was really bad. That's what that candle represent. That candle represent all that. All right. But at the end of the day, as you can see, the market, just as much as it fell, it went back up. All right. Pandemic starting to die down. No one's really talking about it no more as we continue to go on throughout the year. And now we ain't talking about it at all. I don't even think people know how to spell the word pandemic anymore. But at the end of the day, back to trading, we see that here from a monthly perspective, if I'm really trying to take trading serious, then I need to dissect everything that's important that we need to dissect. Since this is oil, that all of us in the world is relying on oil. So this is a chart about just oil. So this is me just reading the chart, just trying to understand it. Like, now I know for sure that if anything happened in this month of March of 2024, I got good support down here in 2000, in this month alone. So if the oil price decides to go down here and retest 67.54, guess what all of us need to do when it gets down there? We all need to be buying right here when it gets there. You see? And if I get the ruler that's over here on the left hand side and we measure from where it's currently at to down here, we'll see how much points that is. That's over 1,100 points right here. That's 1,100 points. All right. So I'm just giving everybody an idea on like what are you really looking for when you're making your trades. Now this is the longer time frame, so this is the best place for any of us to really make a good trade. We can get right here. Think about it. It might be a Wednesday or a Tuesday when this happens. This might take place in the next 2-3 weeks. You never know. But when it gets there, guess what it's going to do? It's going to shoot all the way back up. And you can collect all type of points. So that's all I'm saying. I'm just trying to get everybody's attention to look at things from a longer perspective, okay? Right now we have the new candle. Look at the new candle. If I zoom in now so everybody can really see what's going on, the new candle has opened above. It has opened above our 17-day moving average line. I'm not going into depth about the 17 moving average line because there's other videos on it already. Today I'm just showing you the purpose of this particular video is just to show you like what am I as an individual, as a trader myself, what will I be looking for in order to really make a trade? So since none of us can really make this trade and hold this trade for the next 3 months, it'll be nice if we could, if we make this trade right now, because we know eventually sometime later on throughout this year, the market gonna get back down here and retest this for sure. That's just guaranteed. But think about it, if you was able to get in and hold this trade right now and just hold it until that time comes. You see? You can hold it right now and just sell this on down. Sell it down and get out when it gets to the green line. Sell it. You sell high, you buy low. So that's pretty much what I want to show. I want to show concepts on, okay, this is what I'm waiting for. But if you're not confident in selling right now, just wait till it falls to get there and then buy it back up. It's all about gaining confidence now when you trade. And that's the purpose of, this is what I want to talk about in this video, is confidence in trading. So since this is a little bit, this is way, way, way out there, and the market can still go up. But even if it go up, where can it most likely go up to? We have to now, that's why I say when we look at the monthly chart, we can really see what's really going on. So let's go up and just see where the market can possibly get to, okay? Look at these two candles right here. They both, when you look at the bodies, they both at the same location almost. The bodies equal each other. One candle stopped there in the same location of 90.99. You can see the price over here. Look at the price towards the right. 90.99, 90.84. So we could just put it about right here. It ain't got to be perfect, man. Just try to get as close on the top of those bodies as possible. We'll just say 90.99. That's what the market did. All right. If I scroll over, I can see two candles right here did the same thing that these candles did, but they wicked out. They wicked out. They both fell back down, and even they both got nice bodies that still measure to each other. But we want to go up a little bit higher. So it doesn't matter if you want to use this as an area where the market might go up and fall back down, or you want to use these candles as a area where the market can go back up and fall back down. It doesn't matter. This is all good candles. But to make sure we on the right page, focus on these bodies here, and then focus on any candles with wicks that's still measuring at the same area of these bodies. All right. So that's what we're going to do. I'm going to go look for, I'm going to put a line here. Then I'm going to put a line here. Let's put two lines so we can figure out which one is the best one we need to really go off of. Okay. So just watch this. This is me just getting very technical. All right. I'm just getting technical. I'm putting a line right here on these bodies right here. I'm coloring it red because that means sell, because right now here's the market here. And anything above will, be a sell. And then I'm going to do the same thing, create another line, and we're going to put that line right here. Now, we're going to look at this ideally and then think about which line should we focus on the most, okay? So let's really, really think about this, all right? Let's go to this line first. Let's start at the top and work our way down. At this line, we have two candles right here. Pay attention to this video. Pay attention to what I'm about to say. We have two candles right here. Both bodies is equal. So I created that line and put that line there. All right. Now, all I have to do now is go to the left and see if there's any other candles that matches that same area. Let's go. Go over, see if there's anything else matching, whether it's a wick or a body. Watch this. Oh, we got another candle right here. This one actually has a wick, not a candle, not a body of a candle, but the actual wick itself. So far we have 1, 2, 3 candles has confirmed this line is a good area of resistance. Okay, that's confirmation. That's perfect confirmation. So that means later on this year or whenever that time comes, we know that 90, we got 84 right here, but we'll do 90, 99. All right, let's do 90, 99. It don't have to be perfect. 90, 84, 90, 99 doesn't matter. But we know for sure we have 3 candles that has confirmed. 1, 2, 3. 3 candles has confirmed that this area is good resistance. So that's resistance here. All right. And now going on and, we'll put a little notation here. Let's do it. I want everything to be good. All right. Let's make sure we color this white because the background is black. So let's just use the word resistance. All right, so we're going to use resistance here. So that's 1. So we know 90, 99 is resistance. You don't have to write this down because this is educational purpose, but this is what you should already have in mind. You should be saying that on the monthly chart, whenever crude oil gets to 90.99, it's going to fall back down. So you should already have that documented on your actual notebook or your notepad. So when that does happen, when that does take place, you already know what you need to do when that happens. All right. And to help you out and to help you better that, as far as staying on track with this, keeping up to date with it, all you can do is go up here at the top where it say alert. Create an alert. Create an alert that's going to remind you of that. So right here, we keep all this the same. You can keep the reason for the alert crossing, keep that the same. Change the number where you want to be notified when the market gets to the area. We're going to do 90. We look to the right, the red numbers all the way at the top is at 90.99. This is us getting technical with the trade so we can make the best trades, best entries for when it happens, because it's going to happen. You just got to be ready for it. All right, here's the trigger. It's going to trigger it once or every time the market get there. We only need to do it once. We need to be notified every time the market gets to 90.99, because once it get here and falls down, it could be a whole another year, 2 years before it get back up there. We don't know. And you can give it a little fancy name. What's the reason for this? You can say overbought. You can say overbought. It's overbought. We need the buyers and bought it all the way up so high that it's gonna fall back down. So that's the reason for this alert. Click on create. That alert now has been created and it's sitting there at that particular line right there, ready to go. All right. If you go over here to the side, you go over here, you will see all this on the side right here. And at the top, you will see the little clock like a little timer. You click on that and then show you all your current alerts that you have and either past alerts that has taken place already. But here's that most active alert, the one we just created. It's a overbought alert for crude oil, CL, that's the symbol, crude oil 1, and then crossing. When it crosses to 90.99, that's when I will be alerted. It has to get there. And once it gets there, it's going to activate the alert. And then it's going to remind me and say, hey, overbought. Crude oil is overbought. And then, think about it. I put this alert in right now. We might not see this until October of this year. So it might, as days go by, weeks and months, I might forget what was the whole purpose of this alert. So, like I said, I got my alert here. And then I wrote this down also. So I'm not that stupid and dumbfounded of what is really going on. I'm always staying on top of things. This is what helped me become a better trader. But this is us starting out dissecting first all the different time frames. Okay, this is very important. That's what the purpose of this video. You're going to have to always go back and forth, rewinding this video or pausing it or taking serious notes, because I want this particular session, I want this to really be a session where it start to make sense and you finally get that aha moment. Okay, this is me getting real technical now. We have to get technical because trading technical is the most important part of trading, because every day if a news event don't come out, think about it. This is what's going to happen. This is going to be normal. The market either going to go up or go down. You need to know those areas already of supports. You have your moving average lines on there as the areas of supports too, but you still need to know, okay, why every time the market get here, it shoots back up. And you might not have a moving average line here yet. You see, you might not have anything here yet. But just go and look at the data to the left and see if there's any other candles that's almost at the same location as the candles currently right here. And if you go to the left, you will see, oh man, here go another cluster of candles, all pretty much doing the same thing. And look, these candles, when they was all here at this particular area, it all shot up, went up, and then fell all the way back down. And then now back down here again. And look what it might do again. Another repeat. Go up again and then fall. So you got to be mindful of that. Be mindful and be ready. It's going to happen. All right. Now, that's resistance here. But we also have another resistance here. Same thing. Let's go to the left and look at how many candles was in the same particular area. Let's count. One. We got one candle here. We got two candles with the same top bodies. They matching bodies. 1, 2, 3, because we have a wick. This is a perfect candle. So far we have 3 candles that's confirming that 86.69 is resistance and support. If it's underneath that line, it's resistance, and if it's above, it's support. All right. Now let's keep going to the left to see if there's any more candles. Uh-oh, we found 4. We have found 4 candles confirming that this line of 86.69 is a good area where everybody should be placing their trades at. And if we go over to the left even more, I wasn't trying to go this far over to the left, but hey, we can. All right, this is 2012. Well, that's back. We going way back in time. 2012 is when I first started this journey. But look at this, 2012, guys. 2013, 2012. All these candles, 2012 and 13. Look, Wicks right here. Wicks right here. That's a lot of confirmation. This is 2008. 2008. I was home playing video games. This wasn't even on my mind yet trading. You know. God, we come a mighty long way. Thank you, Lord. We come a mighty, mighty long way. And as you can see, during that time, 2008 era, when it fell down here in 2009, like I said, I don't know why it fell like that, because I definitely was not into trading at this time. But when it fell here on the actual 200 moving average line, and it shot all the way back up. So that's the whole purpose of this trading, y'all, is to really pay attention to the indicators. And then, like I said, if you have to put your own resistance lines and support lines on that, do it. But all you're doing is just getting more technical with it. That's all, you know. So that's all we have to do. So far we know for sure 86.69. We know that's the truth. That's where it's really at, you know. So we can go on and say this is good resistance too. So we have 2 good resistance lines. So we know for sure if the market keep going up now and for the remainder of the year or in the next month or two, and they get here to that 86.69, guess what I will be at? I will be at that party. While everybody at another party, I'm gonna be at the party of that 86.69, because when they get here, I'm gonna create what we have over here. We have the sell and the buy. I want to sell this back down, because if we get the measuring stick, I want you to see from here to here. Let's check the distance. So it's about 805 points. 805 points, y'all. That's not bad. That's not bad at all. That means that if it gets here, it has the potential to fall all the way back down where it came from. And this is where it's at currently. It might get here and completely fall all the way back down to 67.54, you know? So this is something we all need to really take into consideration. So this is how I'm dissecting the chart. And I'm starting on the monthly chart because I really want to pay attention to these things. These things is very important to me, because this is what makes me a good trader. So I know when the market gets to 86.69, oh my gosh, it's about to be a party, all right? That's why my prayers is that everybody really, really, really look at this from a different perspective. And the next time, now when you look at trading, look at it like this is a job now. You know, put the time in and just dedicate the time to just keep going over. And you trust me, you're gonna have that moment where it's like, wow, I see the light now. Oh my gosh, this whole entire time, this is what this man been saying. He been saying the basics. This is the basics. I'm not doing anything fancy. I'm not throwing no more indicators on this chart. I'm only going to put these horizontal lines on there. And we already got our moving average lines right here. 17 right here and the 200 right here. That's all I'm doing. Anything else extra I'm adding is just some more major and support lines, like, you know, major resistance, major supports. That's all I'm doing, because we can, you know, this helping us to be more technical also. This help us to just better our skill. You know, we still have this to rely on, but if the market don't ever come down here for the whole year, it's gonna come here. It's gonna come back to what some old clusters of candles was at one time. That's where it's going back to, you know, so whether it's up or down. So just be mindful of that. So for right now, that's it. We're only going to focus on those 2 right now for the monthly chart. That's it for right now. That's the monthly chart right now. Since here's the new candle for the monthly chart, we ain't here right now. So, you know, we still got 800 some points to go before we get here. We got over 1,000 some points right here to get before we get to this one. So we know that's going to take a little bit, all right? But we do know that now that we have a new candle that's opened above the 17 moving average, we know in theory that this is going to keep going up, you see? But if it does keep going down, say if we know it's going up, but it can also do a pullback and fall down. It can still use any place down here support and then go up. So just be mindful of that too. So now that we got the monthly out of the way, we got the 86.69 out of the way, we got the 90.99 out of the way. Since none of us can really hold trades that much because of the maintenance fees is so much money, and the daytime fees are cheaper, we all can only really trade daytime sessions, which is anything from 6 o'clock to 5 o'clock, Mondays through Thursdays. So with that being said, we are just going to, like I said, use these areas to enter at when the market get there, and just we'll be able to hold it for a few hours before the market close, and then we'll have to exit that position. But just imagine on those days you might catch 400, 500 points, or 300 or 200 points. That's the type of trading that all of us need to be doing, because we're all busy. We do other things. We can't sit here and stare at this all day. I don't want none of us staring at the charts all day. I did it before already. It didn't make me a better trader staring at the chart all day, staying up late at night, looking at the chart to still make a bad trade. It was all in vain. So it's not for us to stare at it all day. It's for us to understand it, understand where it's been before, understand where it's going. All right, where it's been before down here, and where it's going if it goes up here. All right, understanding that this is the highest peak so far. All right, where the market is at $115.69 a barrel. It can continue. It can go back up there, but we know this is a strong resistance, but this way up there. So that ain't really my concern right now. But when it get there, it has to blow past these areas first before we get up here. So I'm focused on here first. If it blow past this, then we know it's getting up here. All right. 1 second. All right, so the monthly chart, that's pretty much how we dissect it. Go to the monthly. Now, let's go to the weekly. Weekly is pretty much what's more ideal for everybody. It's more of a realistic time. Here's the weekly chart. As you can see, our weekly chart has the 200 moving average line on the bottom right here. And look at all these clusters of candles. Look at the weekly doing our job for us. We don't even have to do anything here. The weekly is already letting us know, according to the weekly perspective, you see how the monthly and the weekly is two different perspectives. Monthly is showing us that 200 moving average is at 55.99. Weekly chart is showing us that our 200 moving average line is at 70.42. Look at that 70.42. So this is good when we're talking about trading from a weekly perspective, because even though none of us might not have enough capital to trade for the week, we can still make a good trade when the market gets to this particular location on the week. So Monday through Friday, market get here, we can buy back up, right? So this is ideal. This is what we're waiting on. I'd rather not trade at all until the market get here again, then buy back up. I'm just being honest. So with that being said, 70.42. I don't have to directly trade at 70.42, because as you can see, anybody that trade here for the buy back up, remember this candle kept going down and then shot all the way back up. All right. If you do that, you just got to make sure you don't have all of your account on that position, because if we measure that wick from the line, let's see how much, if somebody wanted to buy right here but the market decided to keep going down before it went up, look how much points the market has moved against you, just so, you see what I'm saying, just so it can go back up in your favor. So the best thing to do is when it gets to this line, let it keep going down because you want to make sure it's going down. All right. But then enter a little bit underneath it, but not far away from it. But just make sure also you're not buying that much contracts at the same time, where if you go into negative 20 points, you really you're hurt because you have put so much money on the position to make the trade that, now when you're in the negative, it's really gonna eat you, it's gonna really hurt you. So let's really get into, the depths of what I'm saying when I talk about over leveraging. All right. Since this is crude oil, every contract on crude oil, one contract represents $10. All right. And in order to buy, each contract is $169. So do $169 times 10, and that's how much it costs to buy crude oil. Okay. That's how it works. So got my calculator here. I gotta pull up the calculator. Let everybody know this is how much it costs to buy crude oil. 165 times 10 equals, pretty much that's how much money somebody has to have when we have to have in our accounts to buy crude oil. $1,600. So $1,650. So let's go back to it. One contract, we'll just focus on one contract, which is one unit. And since the market is currently here at 58.52, we want to sell at 70.42. All right. So, and I'm sorry, I said 50, but it's 78. I'm sorry, 78.52, and we want to sell when the market is at 70.42. So that's about a good $8. $8. You could say $9. So that's a good little distance, good little ways. So when they get here, if I buy 3 contracts, which is $30 a point, I'm gonna check the take profit box and I'm gonna check the stop loss box. I'm just gonna do 1 point, and right here where it's got the dollar sign in the middle, look at all the things in the middle, ticks, price, dollar sign. This is how much you're making per point. You gotta type that point in. Just type in the point 1. For every 1 point, you get $30. That's me over leveraging. I got confidence. Oh man, I'm finna make a lot of money. I'm finna get in right there in my moving average line. But look at this counter. Look at these 2 wicks right here. The market, we were right, but guess what the market did? The market kept going down, then went up. So it went down for 245 points before it shot up. So think about me over leveraging. Remember, I bought 3 units. I'm getting paid $30 every time the market moves in my favor or against me. All right. Let's just say the market moves against me 10 points. Look at this. 10 points, I'm already in the negative $300. Who wants to sit there and watch themselves in the negative $300 off of 10 points? All right. But right here at this particular candle, the market moved the whole full $245. 245 points before it went back up. So if I was to really put 245 here with $30 that I'm losing per point, look how much money I'm finna lose if the market moved against me. 245 points. $7,350. Who in their right mind can afford that, to lose that? You see what I'm saying? So that's what I'm talking about when it comes to over leveraging. If this is too much for you to trade, you have to find something else to trade. Because you're going to have a hard time trying to, be a part of something that's going to actually make you a lot of money, but you don't want to be too greedy, and you don't want to not be wise with the choice that you make. That's why you always pray. I always pray. May God give me the wisdom and understanding of what I'm doing, and to know what my risk needs to really be. I know a lot of people might say, I don't need to pray to know to know how much I'm willing to lose. Yeah, you need to pray about everything. But I'm that type of a trader. I just don't just do whatever I feel like or what I need to. I'm not a beginner trader no more. But I'm trying to help a beginner to avoid going down the route in a path that I took that led me to devastation. It led me to, a place of like turmoil and regrets and like, oh, so much stress and just, sleepless nights. I'm trying to help you out. So stop buying 3 units. Stop buying 5 units. Stop buying 20 units. That's enough for this. We got to stop this right here. This is our problem. We're trading off an impulse. We already messing up because we already doing too much with the units. We already mess up you mess up a ticket order when you already over leverage. Over leverage is buying everything that you have in your account. Just because you got $10,000 in your account, that don't mean you can go in here and just buy 30 units. You see, that's over leveraging. Stick to 1 unit. Just because you got $10,000 in your account, you still stick to 1 unit because you need to grow your account. Your account needs to turn into something, right? We don't want to play with that. We already know what market, limit, and stop orders are. We don't have to worry about no stop limit right now. We just focus on market, limit, and stops. So since the market is here below current price, we need to create a sell limit. And we need to put in 70.42. 70.42. All right. And I want everybody to be encouraged to, if the market comes against you, don't panic and push the get out switch too fast, because you never know if the reversal start moving in your favor. So you want to stay in the trade. Create your stop loss and stay in that trade. You take it. You ride that bull by the horns. You let that bull know who's the boss. All right. That's all you got to do. You let that bull know who's the boss. So what I'm going to do is let's do 50 points. I'm willing to sacrifice 50 points. All right. 50 points would be $500 for me. And in the trading world, that's a lot. So what I'll do is 25 points. If the market comes against me, y'all, it's okay. Guess what? If it keeps falling down, guys, and hit the next area of support, we can ride it back up. Don't worry. We're going to make that back regardless. But I just don't want you to pull out so fast because the market might move in your favor. You never know. So I want to make sure you're there for the whole ride, but don't just, oh, no, it's too much. I'm moving. Remember, you created the stop loss already, so it can't kill you that much if you're the one that went in here and manually clicked on the stop loss and put in the actual amount that you was willing to risk. You can't be panicking and freaking out, like your heart racing because you're in the negative $150, and if it keep moving, you're gonna see the full 250. It's like you don't know what to do with yourself. I can't afford to lose that 250. Well, you the one. Don't trade this. Then go find another asset to trade. But the whole purpose of what I'm doing here is just to show you what you're looking for when you make your trades. So it doesn't matter what you trade. You still gotta know whatever chart you're looking at, whatever asset you're looking at. You still have to know how to really enter into that trade. You have to know what to really look for. What's the reason for it? What's the purpose for it? All right. Very important. This is very important. So take it serious. All right. Now for the take profit, if we buy here, we want to sell when they get here at the next area of resistance, which is 77.46, or before that. I'll just say 75. You didn't even got to get to 77.46. It just give me the 75, 75.00. Give me 1 second. I'm sorry. Yep, I'm going to enter that number in. Let me see. Yep. Give me the 75. 75. Put 00. Get rid of that 6. All right. Why is the price not working? Give me like, yep, right there. we'll just do like 500. If that's 70, we will do. Oh, I'm sorry, we on the buy. I gotta do it this. We want to buy here. We want to buy here, not sell. All right, 70.42. All right, let me just type this in. I'm sitting there the whole time like, what in the world? Why this thing not working? We're buying. We're doing a buy limit here because we want to buy it back up. All right, and if it comes against us down here, then we selling. But if I get out at just 75, like right here as a take profit, let me put a horizontal line on it so you can see it. If I get out right here at I'm gonna make it orange for a take profit line. Then we're gonna change the settings on it to 75 exact, the coordinates. All right. If I get out right here, I buy here and get out right here. The market still can get here, but I want to get out right here at 75. So the dollar amount will be $75 here, but I'm getting in at the price at 70.42. If I'm right, that's a full 458 points or ticks, all right, or pips. This is where I'm gonna get out at as far as the price, and then this is how much money I'll make with one contract. All right, this is how one should be trading. All right, that's keep it that basic and that simple. Okay, it's really that simple. It's not complicated at all. But this is the weekly chart, so this is really good. This is letting us know the full week so far. So that's how you will make that trade. Now let's create the sell trade. Let's say that this is the resistance right here. So this is where the market is currently at. And as you can see, we've been here for about 3 weeks now. We've been sitting here in this area for about 3 weeks. And if we zoom in a little bit closer on this chart, we see almost an engulfing bullish candle, engulfing the previous candle right here. Engulfing bullish mean that, hey, the bulls is completely dominating and taking over from last week. And this is the bullish area. So that means after this week, we have a potential that next week might be a beautiful uptrend. A beautiful uptrend. There we go. All right. So we might go up here. But guess what? Based on the weekly chart, I want everybody to be realistic. Remember what we learned from the monthly chart. If this thing decides to keep going up on the weekly chart, where most likely it might go to. And all we got to do is, if you want to get more technical, get the horizontal line out. Go find candles where they all line up with each other. All right. It's really that basic and simple. It's not really complicated at all, but that's how you do it. So what we will do here is we will sell. You can sell anywhere here or at the orange line, but we will sell. So just in case the market for this week ends, it will end underneath the orange line. So we could sell and then just let it fall down. Remember, we're not making we're not making no market orders. We're only doing limits or stops. So since the market is here at 58.48, look at where the market 78.54. The market is at 78.54. Okay. We can't do a limit order because if I want to sell when it gets here so it can keep falling down, I have to create a stop order. A stop order is when you sell when the price is below the current price. It could be a stop order. But if the price was above the current price, then we'll do a limit order, meaning that the market has to go up and then it's going to fall down. All right. Since I don't have resistance here, like I don't have any other moving averages lines above the 17-day moving average line on the weekly chart, we can actually go to the daily chart and get a little sneak peek, see if there's any areas of resistance on the daily chart before we make our trade. So let's just dissect, go down. Oh man, beautiful. Look at the daily chart. Look what the daily chart showing us. Oh wow, let's remove this out of the way. Look at my 200, guys. I tell y'all all the time, this is where I make the bulk of my moolah from. All my good trades come from that purple line. So look at this. Look, this is beautiful. Look at the 200 moving average line showing us already in advance resistance. There's nothing we have to do now. Everything's is lined up for us. Look, one candle, let's count how many candles has resisted this line so we can get confirmation that this is the actual resistance line. We have one candle, two candles, three candles. I'm gonna have to say it like this, like the Sesame Street. Four candles, five candles. So far we have five candles, and all this is on the daily chart, which is representing 24 hours for each candle. So a whole full day. You see? So all these, so far we have 5 days of confirmation that this 78.83 is good, strong resistance. We all need to be there. As you can see, these candles have some wicks. So some days, you could tell what days had some good news events that took place because it wicked and went up and it tried to go up, but it didn't close above. It closed below. Close above mean the body of the candle will have to actually close above this so a new candle can form and go up. We got no candles that open above this. So let's see. Have I done this before? Let me see if I can find it. I seen something here before that I was able to use. I could have used. Where the smiley face is at? Nah, it's not there. But there was some here one time I could have used the candle itself. Yeah, it's all good. Yeah. I could have thought there was something here where I could have used the representative candle. Maybe in the next video I'll be able to find it. But it was some candles here you can use to show and indicate like what's going on, but I don't see anything. So for right now, we don't have any candles that open above, open above. This one did, but the market and the new candle didn't open above. This one did close above just a few points, but nothing drastic or major. So with this is the current day now, which is the Friday. We can get here or even come up here a little bit or get back up here where these 2 wicks was, and then we'll end the week falling down. That means the next week coming up, if a candle open above here, we're going to continue going up into an uptrend. So that's where everybody needs to be focused on. Okay, I'm gonna wait till the market gets to this purple line, fall down. So when the market gets to the purple line, we can do the same thing. Purple line is at 78.83. This is pretty much now will be a sell. So I'll click on sell, and once again, this will be a buy, a sell, a limit, or a sell stop. Remember, we only do a sell limit if the price that we want to enter is above the current price, so 78.51 to 78.83, or a stop if we're going to sell when the market's below the current price. So since the market is above, the price where we want to enter is above the current price, then we will enter as a limit order. Then we have the price here. We'll change the price to 78.83. All right, letting us know it's 31 points away. We buy 1 unit. Take profit, we could just type in like 50, 60 points, whatever. I'll just do 50 for right now. And stop loss, 25 points. And as you can see here, if I get the ruler and we measure how much the market actually, when it got to the purple line, how much more it went up, we'll go to the highest candle. It shows us that the market moved an additional 80 points from the purple line. So my stop loss definitely going to get hit. But like I said, if I buy less contracts, since this is a E-mini contract, everything is starting at, one contract starts at $10. So I have to go to the MCL contract, which is over here on the watch list. You'll have to click on that, where you can buy one contract that equals $1. All All right, it only costs 165 just to buy that contract. So that's not bad if you pretty much, you know, if you trying to, make sure you trying to save and then you don't have enough capital to play with and you want to only trade a micro, then trade the actual micro. Micro is the less expensive contracts, but it's the same thing you're trading. You're just trading the same thing, cool. But that's pretty much it. That's pretty much how you will do it. This is the whole ticket order right here. You will click sell, and you will see the full ticket right here, ready to go. Look at that. All right, I already know what I'm going to lose on this trade, 250, and I know what I'm going to gain if when the market get here and falls back down. I know exactly what I'll gain out of all of this. So this is how you go about it. This is how you go about it. There's no ifs, ands, and buts around it. No ifs, ands, and buts about it. This is how you go about it. So just make sure we all on the same page. When we all on the same page, there's so much beauty we're going to get out of this. And then last but not least, the 4-hour chart. Here's the 4-hour. Look what the 4 hour is telling us. Look at the 17-day moving average line, everyone. And look how much the market has stayed above it. The market been above the 17-day moving average line since the 27th. All right, so good. Since Tuesday, we've been sitting real good and pretty on this line, just chilling for a good little minute. And as you can see, the market is nice uptrend, going up. And then according to the daily chart, we're gonna be met with resistance on the daily right here. We're gonna be met with resistance at 78.83. This is where we're gonna see resistance. But the 4 hour chart is clearly, look at the 4 hour, is going up. But we're going to be met at 78.83, and we're going to enter the trade at 78.85. That's when we're going to get up here and it's going to fall back down. So just be mindful of that. Be mindful that we got that strong resistance there, and we have 5 days verifying and confirming that that's a strong resistance. So that's just what it all boils down to. This is how you trade. This is how we all need to trade. Never get in here and just do whatever you want to do. Really wait for good setups. Even on the 4 hour chart, you could have waited while the market was up here. Just waited until it fell down and got to this 17-day moving average line, which is at 78.10, and then just enter the trade right there and just hold it and go up. Now the market is already currently 43 points. It's 43 points above. We're currently enter that. So this is how you do it. Just keep pretty much doing the same thing that we're already doing and just keep working at it and perfecting it. And there will be more videos like this to just go more and more in depth and just to let you know, hey, don't trade here, trade here. But look at everything. Right now, if I buy this up right now, if I buy it right now, and I don't look at the daily chart, how far will it go before it hits resistance, fall back down when I'm the buyer? I go to sleep right now. If I make this trade and go to sleep, wake up in the morning, I'm buying. Oh yeah, I'm gonna buy it all the way till it get to 78.83. And I'm buying, but I never put a take profit on it or a stop loss on it. You see? So I can wake up and then next thing you know, I was already, before I went to bed, I was 20 points in the money already. So I was already still looking at $200 something. But by the time I wake up, this thing is falling 300 points. And it's like, oh my God, oh my gosh, how did that happen? Well, remember, I shouldn't be that surprised because I already knew that on the daily chart, we got resistance. So it shouldn't surprise me that it's down now 300 points once it got back up here in the middle of the night while everybody was asleep. Why did I wake up surprised when we already knew the daily chart was showing at 78.83 is a potential that it might fall all the way back down and maybe drastic. But we failed to pay attention to all the signs. We failed to read all the signs. And Because of that, we have to pay dearly for our actions, and that's how this works. So just look at all the time frames, making sure that if you buy, there's no resistance. If you sell, there's no support that's going to be blocking you from keeping you from being successful at trading. So just be on the lookout for these things, and that's pretty much it. This is how I make all trades. Right now, you can make a trade here with that sell limit. We can make this trade here, and then wake up in the morning and this thing down 300 points. And we woke up with $500 in our account without us being there to watch it. That's how you have to make trades. You have to set them and forget them. You gotta just let them ride out, let them play out. That's all you can do. You don't have to sit here all day and stare at the laptop and be like, "Oh, I just can't get this." Yeah, no, you gotta put the time in to study. That I do say, but you don't. You don't have to sit here all day looking at this. You know, just dedicate time to the trade. Do 30 minutes a day, whatever you got to do to learn, and spend the most time, like I said, learning on the weekend. Spend that time reading and dissecting your craft. You know, that's all you can do. You can't trade no more on the weekends because the markets are closed for Saturday and then reopen on Sundays at 6. Ooh, excuse me. But that's where you'll pretty much, take that Saturday to just read on more, go back and rewatch the old videos. And then Mondays, Sundays through Thursdays, Sundays through Fridays, I mean, that's when you perfect the craft. Everything you have studied, everything you have put a lot of time and effort into, make sure you are now practicing that with the live trades, okay? Other than that, that's pretty much it for this session. We'll do more sessions later on, but for right now, I wanted to go more in depth with the trades and making sure everybody analyzing everything. Remember, Saturdays and Sundays need to be looking at my news, and then getting on here, starting on monthly, weekly, daily, and 4 hours. You need to be looking at all those different time frames so you'll know what it is you need to do and don't need to do. It's that simple. So make sure you are very focused and aware of these things. All right. I do pray that this knowledge finds everyone, and that God pretty much opened up everybody's hearts and minds to understand what this is all about. May everybody have a good one. And until next time, God bless.